Okay, gold, one of our users' go-to instrument. Um, it's actually one of the market's favorite instrument, especially when related to the Fed, inflation concerns, interest rates, and so forth. Personally, I prefer to concentrate on the technicals, and in doing so, that allows me to track the momentum and trend in the market according to where the price is relative to where it was yesterday, last week, last month. So the way I approach the market is I look at the highs and lows of those time frames. So there's the month, the week, the day, and this trend predator indicator, which by the way is up for a free trial if anyone wants to reach out and claim that, does a very good job, an awesome job, of identifying where the flow is in terms of which direction and the higher time frame traders that are driving the price one way or the other. So let's break that down. Looking at the table, we've got the monthly chart and breakout. So I'll come out to a 1 hour chart and we'll scroll back and we shall look at the prior months. Now, you'll notice that this is color coded. So purple is for the month. So if we look here to the right, first of all, we got the previous month low, the previous month closing price. If we scroll out a bit, we've got the previous month high. So just looking at the levels, we know where just looking at the right hand side of the chart, we know where the levels are. But what we'll do is we'll get rid of these days separating and we'll just look for now at the bear with me. Okay, if I just pause the video to tidy up the chart a bit. So as you can see, we can scroll back, we can identify the monthly ranges, and what we can see here is the indicators telling us that we broke out of the December highs this month. Okay, the previous month was inside of that, so this month is broken out current. The previous month was inside of the previous month. Okay, the previous month pulled back inside of the month before that, the month of October. So that's bullish. So that gives this a somewhat bullish characteristic, even though it's inside, because it closed higher than the month of October. It's somewhat bullish, but either way, we've got a bullish breakout. So we've got a market here on the monthly chart, higher time frame, that is bullish. Okay, breaking up. Now, an inside month is essentially a coil. It's a month that's been coiling inside of the previous ranges, and it can lead to a breakout that will either stay broken out or pull back and fail potentially and come back to the other side in a long squeeze towards the stops below. But in any case, because we remain above December's highs, we assume that we will continue higher on the monthly chart. And what this table is looking, well, what we're trying to ascertain from this table is whether we've got continuity across the lower time frames. So we can now look to the weekly chart. So let's look at the weekly chart. Again, it's color coded, so we're looking at the weekly levels. And as you can see, if I put some boxes on it, make it even more clearer, those are the weekly boxes. Okay, the price is in a box, always in a box. There's the range. And as you can see, we've got multiple weeks of pushing higher. So the indicator picks up on that. 3 weeks of longs. That indicates that it could be about to accelerate. And in fact, it's already done so. If we look at the daily chart now, so we've got the weekly and monthly somewhat bullish because it's 3 weeks long, so a bit dubious about the continuation of this trend. Perhaps we're going to get one of those months, an inside month that breaks out, pulls back and fails, and we come back for the stops, potentially. Let's have a look. We'll have to wait and see. Either way, we're not here to speculate. We're here to trade what we see. So on the daily chart, what we can see is we've broken down start of the week. We had an inside day yesterday. So what does that tell us? An inside day? Well, the same rationale that we put for the month. It's either going to break out and stay out, or it's going to break out and pull back and go to the other side, potentially. So that, in effect, is what is happening. So we've had a fake out high. We've come out of yesterday's highs, fake out high, and we've been continuing in a downward slope throughout yesterday's inside day range, which puts the downside in play, the downside towards at least the stops of yesterday, which presumably are going to be placed below yesterday's lows. So we've got a long squeeze in play, coming down into towards the New York high there. No, sorry, what's that? That's the New York low as a support base. Okay, so that's where the price of gold is stalling at yesterday's New York lows as support. Now, if we break below that support, we expect and assume that because we've been accepted in yesterday's value area high, that grey dotted line, quite often if the market closes outside of value, if it comes back inside, there's a high probability, according to market profile, that it will travel back to the other side of value. So we've got the point of control first that comes in near, depending on your broker and what resolution your volume profile set to, but that comes in at around 743 rounded up as a potential support, at least an initial target. And then below there we have the value area low, 2738 or 2737, call it, round it down, and then the stops below the lows of yesterday, which is round about, depending on your broker, 2735. So those are my downside targets, support. I'll draw that in as well. Yesterday's lows, New York session lows. Okay, that's essentially the low of the day of support. Okay, so that is the trajectory of the market. There's no reason to assume otherwise until the price is forced back outside of yesterday's value area high. We'll mark that as resistance, first resistance. And that then could lead to a move out towards yesterday's highs and today's highs and back up towards the closing price of last week, previous week closing price. The stops above what was a very wide range day on Monday, okay, into that breakdown area. Potentially stops are placed above here. Those that are going short, holding on for dear life in anticipation of lower levels to come, but vulnerable to a move up if the market gets back out of yesterday's value area. And that then is obviously leading to prospects of a move back up into last week's highs if we get above Friday's naked value area high level. So that is where I'm going to argue is my upside levels. I'm marking yesterday's highs as well. It coincides with a naked point of control. We'll mark that off. Okay, those are the upside levels, downside levels, according to my analysis. That's for gold. Good luck trading. If you're trading the Fed, hold on to your hats.